What is going on, everybody? And in this video, we are giving you a state of the market and stock picks for August 4th, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenomenal market. Yes, we do get dramatic here a little bit sometimes, just sometimes though. So with that being said, the state of the market, what are we looking at? Well, the whole Pelosi China thing is kind of just over and done with. We had that major tensions yesterday, and they've died down. Pelosi is back. Pelosi is meeting Japan. I think meeting one of their, I'm not sure who in particular for Japan, but she is meeting with someone from Japan. I think, yeah, so there's that. What is going on, everybody? In this video, we're providing you a state of the market and stock picks for August 4th, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this phenomenal market in which we are in. Yay. But with that being said, state of the market. Well, currently right now, yesterday was all about Pelosi and China. Pelosi is back, and it seems like the market is back to the old interest rates talk. Now, it's not saying China is not going to retaliate. You have to understand that now you just essentially kick the hornet's nest. Hopefully the hornets don't sting you, and we'll see where we go from here. But ultimately, the market right now is currently back to interest rates. Yes, the funneled interest rates. And a lot of Fed members have been talking. A lot of the Fed members have been saying this is not over yet. They are emphasizing very stringently that this is not over yet. This is going to get worse. The Fed futures are pricing in a 75 to 100 point basis move on the next meeting. Currently right now, we are in earnings mode. Currently right now, there's a long way before that next meeting. I think we could potentially run for a couple weeks before really even starting to worry about the Fed. But before that happens, you do have non-farms on Friday, which will weigh heavy on the market. And you do have core CPI on the 10th next week, which is going to essentially weigh extremely heavy on the market, because we need to know if it's coming down. And we're talking about headline inflation, so we're more concerned about food, and we're concerned about energy at this point, because that is what's driving everything else and causing people to not be able. This is why you're seeing a drop in all other inflation, because people are just trying to keep up with the basic necessities. And so with all that being said, this is what you're seeing. And I've talked about this multiple times, but going into tomorrow, we have to see where we land. Technical wise, we've been grinding against this 4184 mark, and could potentially get rejected pretty hard here. And now this is a second attempt here. As you can see back here, we had the first attempt. I always talk about the first attempt is the one you want to be in, and you get this. This one, we may get a pullback, but maybe only down to the 4K mark. So we have to see where we end up. Now, I think to go either side, to break that or to come down, I think we need some sort of catalyst, and we might be waiting on that catalyst for perhaps payroll. We've had a lot of earnings. Again, if it's not some name brand you don't know about, they've been essentially getting crushed left and right. Some have done very well, but majority of everything is either one very past, or majority of them have barely skated by, barely made estimates, and they're showing a lot of signs of weakness. And we're seeing that in the earnings. And what scares me about Q3 is that, again, if we have another 75 point or 100 points, right, you're not going to see it affect the market until later on in these earnings. And I think if we have another 75, 100 point basis move, these companies are going to be hurting really bad. Your Apples or your Teslas. This is why they've been doing cutbacks. This is why they've been doing stock splits. And it's not saying we can't get out of a recession quickly. We are in recession, but again, I think we are in the very beginnings of a recession, because you're just starting to see layoffs. You're just starting to see GDP 2 quarters in a row slow down, right? I think you still got some time. You can go quite a bit of time in a recession. I think we can recover quickly, but again, until inflation, there's just too many things that could happen that could make it get worse. We could go to war with China. We can, Russia is something that is. These are all very realistic things that could occur, and realize that you know Russia can shut off Europe, and then they're already starting to talk about that, about how there isn't tons of demand in Europe already for oil, but yet they're already having issues. So if there's any kind of issues with, especially when it starts getting into the colder months, if there's any issues with gas and the demand starts going through the roof, it's going to be a major problem over there. And don't think it's not going to affect us. It will affect us. The inflation will continue to run. We are tapping into reserves. That's what you're seeing now, in hopes that something plays out over time. But we see. This is why we do daily updates, to see what new information we get to move forward, to position ourselves correctly. So technical wise, again, looking at those two levels, I think we could very easily break this. I don't think it would need much. Maybe if we start talking about 100-point basis moves again, maybe we could just come back down. Again, my zone for 75 is all the way down at the 38.84 mark. Could potentially happen, right? This is starting to get a little bit too parabolic. This is okay to run, but your back tests have been pretty small so far. So I can see this breaking back down and coming at least back down the 4K mark. Now, where it goes from that point, it really just depends on what information we have at that given point. This is the way the stock market works. It doesn't just go up because everything is fixed and we go up. That's right now. It really depends on your window, right? It really depends on your lane. What does the next 6 months look like? Well, we still have core CPI. We still have non-farm. We still have the Fed. And 2 months that are potentially going with another 75 to 100-point basis move. Now, what does that? How does that impact these companies? Well, and it's making it more expensive for these companies to operate. And so, what does that mean? More cutbacks. What does that mean? Less jobs, right? What does that mean? I mean, people are digging into their savings. People are running up credit cards. Their credit cards are going to max out. There's going to be no jobs. And then what happens at that point? This is what could potentially be the worst case scenario. And you have to know that it is a very strong possibility that could happen. Will it happen? Who knows? No, I'm not one here to tell you that's going to happen, but there is a very strong possibility it could happen. And things are lining up for that. So when you see them, the ducks start lining up, typically they do, but it's not saying that they will. Something can change that very quickly. It's just the way the markets are. So with that being said, again, we have to see where we open up here tomorrow. Again, there's still earnings. I don't think the earnings are really going to matter. I think we're going back to China and data sets as what's really going to make this thing move. So we have to see about that. Bitcoin, I don't really want to talk about Bitcoin right now. It's actually selling off extra. Actually, we should probably pull it up. It is selling off pretty heavily after hours. As you can see, it did wick, hit support and wicked. But again, it's going to follow the market in general. I think if there's any worries or concerns about China or Russia, could potentially start selling the market pretty quickly, and then the whole dynamic, we know what's going to happen from that point. The dollar is still very strong at 106. It hasn't even hardly moved. I mean, it's shifted. I think it dipped all the way down to 103 at one point. Your oil is coming down. It's at 91, so it is coming down quite a bit. But you want to continue to see that come down, especially going into the winter months. You want that. You don't want oil prices to be through the roof at that point because demand is going to be extremely high. But yeah, and then looking into tomorrow, let's look at Tesla. Again, it's already had this parabolic move. To keep expecting it to keep going up, it's not going to do that, right? This is, to understand, we've had a rough couple of weeks with the Fed. Now this is only kind of open window, so you're going to get these massive rips. And this is even really massive. This isn't the kind of Tesla it has moved up 200 points, but it hasn't been like Tesla normally 200 points in one day, right? Well, just about. It goes well over like 150 points in a day. It used to, but it's been stock splits. Now it's done this. Now, what if we get another 3-to-1 stock split? How is it going to move? It's going to be half of what this is. So you may only get maybe 50-point move, or maybe an 80-point move at that point, not 200 over a span of 5 days or whatever the case is. But it is stalling here, and this is something to keep on watch. The market in general is stalling. It's hitting resistance, right? I think this thing is going to start dumping down at some of these levels and testing, like Tesla coming back down to 227 is going to happen. I think it's just a matter of time. Once the stalling is done, it'll come back down here. I think it is topped out essentially at the 930 mark. We're seeing that, and I think could potentially sell. It really just depends. If we can get some sort of good data or something, this thing could pop over. If it does pop over, this will definitely be a clean break. If it can pop over the 933 mark, it'll be a strong run, potentially up to 975 or that nice around 1K mark coming up. So I want to keep that one on watch moving forward. A lot of the ad revenue companies did extremely well today. Look for potential continuation here. If this thing can hold above 119 tomorrow, this thing I think could potentially start running pretty close to that 123 mark, and that's the daily 200. Again, you're going to get a hard rejection off that, but I think you can get a strong push up to that. So something I do want to watch. Again, it all depends on market sentiment, which can be changed very quickly. So you always have to keep that in mind. AbbVie is one I want to watch. I like the consolidation here, just as long as it doesn't give out that 141 mark. I mean, you could put your stop potentially down here, the 140 mark. It really depends on your entry. The closer you can get it to 140, the better. And keep it tight. So if it does come down, but loose enough to where it doesn't tag you out if it just dips and then rips at that point. So I do like AbbVie as far as like an off play. I don't really provide those much. Moderna is another one. Massive morning, massive ripper. Looking for a continuation on this. If it can hold, if you can get an hourly candle that opens up above 189.40 here, I think this thing can rip even stronger up to the 208 mark, right? I think you got a lot of headroom here. Second days are normally really strong. So I do want to keep Moderna on watch for tomorrow and see what happens there. Let's take a look at BA just to kind of get an understanding of what's going on with value. Right now, it's not doing too bad. It's kind of holding, and the banks are a lot of the same way. The banks are just kind of like flat, not really doing much. So that'll be interesting to see. As long as they hold, it should be okay. But as soon as banks do give out or value starts giving out, tech will follow shortly after. Tech can hold up for a couple of days, but then it'll roll over. Again, this year has been really about banks and really about value. Has really helped because tech has really struggled in the beginning of the year. So the tech live days where tech just pushed everything have changed, and things are a little different right now. So you're just adjusting to the new environment until something tells you otherwise. So let's look at JPM. JPM again struggling. Sideways action. There's no real point in looking at these. There are a lot of sideways. GS has obviously been doing very well, had a great earnings, and that just kind of carried it up to where it is now. It's breaking above the 200 daily, so that's a good sign. Could for strong possibly head up higher with the breaks that it has. It's broken the 200 and retested it, and now it's ready to start heading back up. So you've got some great daily breaks there, which is fantastic, phenomenal. And then I'm trying to think. I don't really want to give too many like picks. I don't really see a lot to be played or a lot to be forced. I think again my two favorite ones are probably AbbVie and whatever the last one is I was looking at. But those two are my picks going into tomorrow. I think. Again, Moderna's the other one is. I think those healthcare could potentially start running again, get that cycle back in there since they've dipped. If they start pushing, that means tech might actually start coming down. So to look for that transition and see if that's what does happen. But I don't want to make this video too long. Again, there's not really a lot of new information, and I don't want to drag this out. So I'll kind of just only provide new information and let you know what's going on. But if you made it this far, I do appreciate you. And until next time, I'll see you guys later.